Steve Leisman joins us this morning with CNBC's exclusive rapid update tracking economic forecasts on the street. Steve.
Yeah, Andrew, hot off the presses. We just finished the last calculations this morning, and forecasters believe the economy boomed in the first quarter, will boom more in the second quarter, and will stay strong into the third, only gradually winding down beginning next year. Here's the CNBC rapid update, quarterly estimates of 13 economists. CNBC sees an average of on the street of growth near 7% in the recently completed first quarter, above 10% in the current, and growth of 7% and 5% in the second half of the year. Not too shabby. Greg Dako from Oxford Economics writes, the consumer boom is only beginning. A strong start to the year means that consumer spending growth could approach 10%, while GDP surpasses 8%. But John Riding from Bream Capital, he worries there's a valid issue as to whether the economy can meet these demand side estimates. Obviously, some inflation concern inside that comment. On an annual basis, economists don't see a return to trend growth. That would be around 2%, even a little bit under, until 2023. The economic contraction in 2020, you can see here down 2.4, gives way to a sharp rebound. For the full year, we see 7%, 4% for 2022. And then that 2.3 or 2023, that we only have about half a dozen estimates, that's more towards trends growth about 2 years from now. The estimates, well, a combination of massive government spending and the rebound from the pandemic. And it's very difficult to separate the two for now. Only once we get past both of these impulses into the economy do we get an idea of how well the underlying economic growth is doing. Andrew?
Question for you. Is there really anything you can look at right now to see if there's just a sugar high or if this is sustainable?
You know, I think it's early yet, Andrew. There's no perfect experiments in the economy. We've got these two massive impulses coming through, the rebound from the pandemic and all of the government spending. And you have to also wonder how much of the infrastructure plan, given the conversation you're having with Arthur Brooks in the last hour, we don't know how much of that comes through, and it's hard to tell how much of that is built into the forecast. That's 8 years of spending that would be out there, along with a tax hike along with it. So there's no perfect experiments out there. The thing I'm going to watch most closely, though, Andrew, is business investment, to see how much confidence there is for buying new equipment, building new plants, and those sorts of things. That's the best gauge you can get. And, for stock investors, I'm not sure how much they care if it's sustainable or not, because remember, what we're showing you is the pie here. That's the GDP pie, and it's the extraction from that pie that is profits.
Shepard Smith here. Thanks for watching CNBC on YouTube.